to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
And welcome back, everyone, to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Good morning, Sip. Good morning, everybody out there.
Beautiful Friday, April 8th, over here on the West Coast. Have some big news. I don't know if I'll call it big, but we had some news events this week that have affected some of the things that we've been talking about. What do you think is top of mind for us to dig into today?
Well, my big news, there's been all sorts of tidbits that we should talk about, but the biggest news was the Fed meeting minutes. The Fed meeting minutes on Wednesday were released, and when people delved into the last Fed meeting, the Fed meeting minutes always gets released 2 weeks after a Fed announcement. So 2 weeks ago, they announced that quarter point rate hike. But now we get to see what they actually said behind the scenes. They released the discussions. And so, Sip, I've been talking a lot about this whole quantitative easing thing, and I'm putting it up screen. This is the public website that the Fed puts. And, people have been asking me ever since our whole discussion on quantitative easing, like, how does that work? Well, literally, there's people at the Fed, once they get the instruction, who go ahead and go on the market and they buy bonds. They buy treasury bonds. They buy mortgage-backed security bonds. And lately, they've actually been buying really secure corporate bonds. And they people have been asking, where do they get the money? They're the Fed, right? They make the money, so they don't have to come up with the money. They basically write an IOU and they put the asset on their balance sheet. And so you hear about the Fed balance sheet. So they're literally creating money, like buying things with money that's made. And by doing that, they're almost artificially creating a demand for something that otherwise wasn't there. And so by raising the prices of bonds, that lowers the bond's interest rate. And so everybody else who likes to invest in the market finds that the bonds are no longer returning what they've done in the past. So they start to turn their attention on other things. So that's why, for instance, since the Fed started doing this in 2008, the Dow has rose from 10,000 up to where it is now, around 35,000. That's because all this money that otherwise would have been going towards bonds as investment dollars has now been redirected into things like stocks. And that's why we've seen this big interest in things like options and futures, crypto, NFTs. The real estate bubble is at an all-time high. And you've got REITs and SPACs and all these things that are making other government agencies like the SEC, the FTC, all those folks get a little bit jittery because people are looking for things to invest in. And so they're actually, because the Fed has done this. So what we found out in the Fed balance sheet is that the Fed is hearing this, and plus the Fed is seeing all this inflation. And the outward kind of news 2 weeks ago was that they raised interest rates a quarter point. Well, now that we see the minutes, we see that they were actually talking back and forth. The members of the Fed committee were talking back and forth, and they're talking about half-point rate hikes moving forward, right? They're saying that's not out of the question. In fact, some of them even wanted to do a half-point rate hike this past one. But then in addition, this whole conversation of this Fed balance sheet came up, and you can see that even to this day, they have been continuing to buy these assets and take them off the market. Well, last month they said, no, we're done. So the purchases and the Fed is, $9 trillion is what they've purchased to date. That's what's on their balance sheet. That's what you're seeing on my screen right now. And you can see how right at the beginning of the pandemic, they had to do that because everything came to a stop. So they had to keep things moving. So they're one of the biggest buyers of these corporate bonds. With them stopping their purchases, they were buying on the tune of about $100 billion of these assets every month. Right now, think about it. There's a deal that we're about to talk about where JetBlue is talking about acquiring Spirit and Frontier. They're in this little battle, and they're talking about a $3 billion price tag. The Fed has been injecting $100 billion into our markets every month. So that kind of puts it in perspective of how big a number that is. And they've been doing it for quite a while, to the point where in the beginning of the pandemic, they were at a balance sheet of around $4 trillion, $4,200 billion. They're up to about $9 trillion that they have basically created and put into the market by buying these assets. Not only did they say they're going to stop, and they have stopped buying every month, they're talking about starting to sell. And that's going to be significant. And I've been raising the alarm bells about this for a while, but they're going to be in the meeting minutes. They're talking about selling something like $93 billion of these assets every month. And they want to keep doing that until they get back down to at least the 4 trillion mark, if not further. So now you're going to get the opposite effect. All of a sudden, bonds are going to go up in their yield very high. And people are probably going to, and this is what they want, they're going to start abandoning these more risky investments, I would imagine, and start moving the needle back towards stocks and bonds. So we might see, and this depends on how elegant the Fed does this, but we might see some of the housing, crypto, the NFT, anything that was an unusual investment might see a deflation in the upcoming months as the Fed does this. I mean, if you think about it, about 100 trillion a month, for them to get down, they're going to have to go 40, 50 months. It's going to take them 5 years to get it back down, even to the level pre-pandemic, let alone the level before 2008 would take more like 10 to 15 years at the rate they're talking about. Do I believe that they're going to be able to keep selling off? I think the market will fight back. The market fought back when they tried to do some of the selling off in 2013. They were like, you can't do that. You're going to pop every bubble out there. So we'll see what happens, but this is significant, and a lot of investors took note.
Yeah, and I mean, we can't continue to just let that chart and number go up. Like in the end, it's not good for the overall system itself. So I do, I am looking forward to seeing what's going to happen. 40 to 50 months seems reasonable, right? Inflation is extremely high, so we do need some things. So we'll see. The next notable event, will that be the next Fed meeting?
Uh, the Fed meeting, we're going to be having to watch the price of oil and watch what happens in the Ukraine, of course. That's going to be significant. If Germany decides to go off Russian oil, what does that mean for us? Because, we all have to buy gas for our cars still. We haven't gone to a full-on electric economy. And even if we do go to electric cars, everybody, there's some sort of incentive for that or something like that. What are the power plants? Solar, although it's growing, wind, although it's growing, is still a small, sliver of the world. Even nuclear is just a small sliver of the world power. Most of it's still coal, gas, oil, natural gas tweaker plants. So it's got to be slow. I don't know. Yeah, I think the big next thing that we're going to watch for is the next Fed meeting, unless something else comes up, unless the end of this Ukraine conflict comes up. That'll be a nice little push for the market.
And the expectation would be that half point. Would a 0.75 move be extreme?
Yeah.
You think so?
A 3/4 point move combined with, and again, I keep bringing us back to this whole balance sheet. The interest rate hikes um, have a much more muted effect than buying and assets on the market. The Fed is this huge customer. I mean, the Fed has outsized China, Japan. Those were the two biggest buyers of US bonds in the past. And the Fed has tripled their balance sheet, right? And the Fed can't do anything. Like China and Japan, at least this is a currency, this is a asset that they can bank on. They can basically launder their money in. The Fed, the Fed's basically using it. The only good sign behind this, by the way, is that there really at this time is no other currency that rivals the U.S. dollar. So that's the reason why the Fed can basically create all this money and sop up all this money and it not have the biggest effect on the world economy. And that's just because the US dollar. But, over the next 20 years, while we're trying to unwind balance sheet, you never know, especially with the Chinese yen, right? The Chinese yuan. So very interesting. But yeah, coming back to the interest rate question you mentioned, a 3/4 point would be significant. A half a point move would be significant. I mean, speaking of trying to slow things down and make the inflation stop, people are going to have to start moving their money from buying cool stuff, which is what's driving the prices up, to paying their mortgage, paying their
Yeah.
rents.
Yeah, this is going to continue to be a topic I think we're going to talk about every week just because it's just having such an impact on the market.
Yeah.
With that being said, I just want to touch on one other note this week and just get your feedback. But the Elon Musk stake in Twitter, what are your thoughts on that?
I mean, that's significant. I'm wondering what his motivations are. There's a lot of skepticism, or there's a lot of theories out there. Elon Musk is known for wanting a lot of like laissez-faire, let the markets balance themselves type attitude and things. And so, with his purchase in Twitter, does that mean that now he's going to have influence on Twitter around their ability to quiet people? When Twitter gets a lot of pressure, especially from their followers, to quiet people, Twitter bans their account. Will they be able to do that if one of their biggest shareholders says, no, you can't do that? I don't know. So a lot of people are theorizing around that. I definitely don't think it's a way for him to make money. I don't think Twitter makes money very well.
Yeah, well, that all comes from advertising, and they have a pretty horrendous advertising platform. So if they can
Yeah.
fix that, there's potential. But it was a big story this week.
What are your thoughts on it?
I think that it does have a lot of potential if you compare it to like Facebook. Um, the true stars, in my opinion, the true influencers aren't on Facebook. They're all on
No.
Twitter. So there's a huge market of legitimacy there. Um, Therefore, you can get good ads in front of good people. They're just infrastructure for running it is horrendous. Like it's not even close to
Mm.
Facebook. So if they can implement some of the tech improvements and you know appease the advertisers because that is where the revenue comes from, it could make money.
So do you think that that's Elon's move? Elon is going to go in there and try to revise the technology?
Well, I think when he gets a look at it, yes, because he's a very tech savvy person. But I do agree with you. He is more of a free market guy. And I like that, right? Like even before the news came out, he tweeted a poll asking his followers, do you think Twitter, gives you free speech, right? And like it was like 80% said no, and then he was like, all right, big news coming. So, you know, there it is a very gray fine line, especially when you start to get into advertising about what you can and cannot say. And like this may be, storyline for the next decades to come.
Maybe.
All right. So with that being said, let's go ahead and give anyone who's watching an opportunity to jump into the chat and leave any questions. We do have a couple of tickers, position strategies that we're going to go over. Before we do that, we're going to invite everyone to jump into AJ's weekly webinar. I'm going to drop the link into the chat, and I'm also going to play our little commercial, and then when we come back, we're going to go into some fun examples.
Nice. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, our first ticker
Before we go into that, can we take a look at the S&P 500? Just
let's go.
We talk about, let's. And by the way, you guys, my options premium group has been getting so spicy recently. I think you should. I'm just giving an additional plug to that workshop. Check out that workshop. That workshop, you're going to learn enough to be dangerous, and then consider the offer at the end, because my group is getting so good, and I'm getting such good feedback about the type of returns they're making. You don't want to miss that. We talk about the S&P 500 every week. And last week, we thought we were getting faked out by a top reversal because we touched our confirming indicator. And we just use a simple 3 and 5 day exponential moving average crossing. The 3 touched the 5 and then bounced off. Well, since then, it gave us our confirmation. It gave us our crossing. And you can see that right here. It gave us that crossing, which meant that the top that we found on March 29th was the solid top. Now, that top, compared to the previous retracement, was over 100%. That means that the S&P 500 is teasing us with a reversal into an uptrend. I'll give you this first move that it made from March 8th through March 29th. Turned out to be a weak attempt, not a strong attempt, but a weak attempt at an uptrend. But now, and I say this to my participants all the time, every new trend becomes mature when you have a minimum of 2 tests of support and 2 tests of resistance. So, for instance, if this is a new test of resistance, this was a test of support, we need another test of support and another test of resistance to get ourselves a mature channel in the uptrend direction. So what does that mean? It means that even though we had kind of a weak attempt, and when I say weak attempt, what I mean by that is we didn't go far enough to make it a strong attempt. We just barely crossed the line into calling this an uptrend. This move is a move in the uptrend. We call this an expansion move in an uptrend. And now we're in a contraction move of the uptrend. We need to watch where this next reversal occurs. I want it, if I want it to be into a strong uptrend, start building that strong, mature trend, I want it to reverse somewhere between this $4,350 and this $4,450 mark. So in that $100 range, I'd like to see the reversal. If it reverses like it looks like it's doing right now, a little early, that gives me a little bit that, that we would consider that a second weak move in the uptrend direction. And if it overshoots that, if it goes into this range down here, we would consider that a weak move. And if it overshoots it and goes all the way down here, that would negate this first uptrend move, and we would say we're still back into the downtrend. So, Sip, we're watching very carefully where this next reversal occurs, and if it recurs, in any of these hot zones, like I'm talking about between 4350 and 4450, 4,450, 4,350. That's going to be significant in us wanting to rejigger our whole portfolios in the up direction. If it doesn't, if it reverses now or reverses in that lower section or even more, reverses down below 4,170, then I'm going to keep my portfolio right now is very much swayed to the downtrend that we've been in since November. So I'm going to keep that downtrend and keep going with it. So in this moment right now, we're in a little bit of a limbo state. And so we have to treat that as such. We have to be a little bit more nimble especially if we're doing premium selling. With our premium selling, we want to be more conservative with our protective options than we would otherwise, because we don't know if things will change on the dime. It's day by day right now.
Yeah, and with the interest rate news that we were just talking about, there is definitely more potential for pressure to the downside. So it's good to see that level kind of in a longer, I don't know, how far back are we going there? What is that, like 2-year view? No,
This is just a 6-month view.
6-month
And
view.
so we were pretty much in a uptrend. If I take a look at that 2-year view that you're talking, you can see that we were in a clear uptrend. This was all, and again, I attribute this a lot to that Fed bond buying, because now people had money to trepid. And here's one other thing folks have to: bull climbs up the stairs and the bear jumps out the window. That means that when you're talking about a risky investment like crypto or even stocks, people don't take all of their savings and just throw it in there. At least not the normal person. Take all their savings and throw it in. They put it in very cautiously, very trepidatiously. And what that means is that bull markets go up nice and slow. We see here over a period of 2 years. When the proverbial poop hits the fan, the scoop is that people aren't going to cautiously and trepidatiously remove their money from a risky asset. They take it out all at once, and that causes the bear to jump out the window. So you see here, it took something like 6 or 7 months to get up a certain level. We reversed that in 3 months. Right? And so we're trying to see where we go next. A lot of the Elliott wave folks who look on the grand scale are actually saying that this move up was just a correction and got one more big move down. We'll see what happens here, but a state of uncertainty right now, and we have to treat that as such. All trading philosophy for the next couple of not months.
Yeah, so we'll definitely revisit that next week. But we've got some individual opportunities that I think we can take a look at, starting with a ticker stock that we actually featured. I don't know if it was the last episode or the episode before, but Ford, very popular, the original car manufacturer. But because they're starting to break into EV and stuff, they are becoming more innovative these days.
Yeah, absolutely. So I just wanted to feature Ford because I did again, being a little bit more nimble, seeing some stuff happening. I did some quick premium trades. So I own Ford stock anyway. So say for instance, I got some Ford and my cost basis right now, it's a little lower than what I'm about to say, but because I've been selling premium on and off Ford for a while, but let's say our break even price is $16. So right here, I got a signal. This was on March 31st. On March 31st, I got the signal. March 30th, I'm sorry. On March 30th, I got the signal to sell some premium and buy some protection. So let me tell you about that deal. So I bought the $18, or I sold the $18 premium. And on that $18 premium, I made 35 cents. Now, this thing was going to expire on April 14th. Now, this says April 15th, but April 15th is a market holiday. So they're actually, next week is monthly expirations for April. And it's the rare occasion that the monthly expiration is going to be on a Thursday instead of a Friday. because Friday the markets are closed. So April 14th, this thing's going to expire, and it's when I sold it, I made 35 cents. I took that 35 cents and I bought myself some protection down here at the $15 mark. Again, this was the April 14 option. The protection I bought was the June 17 option. So that gives me a little bit more time. So June 17th, $15, and it cost me 55 cents. So I took that 35 cents I made by selling premium and I paid for the 55 cents. So I only had to take 20 cents out of my pocket to buy this protection. So fast forward, we're at a point today that I'm going to be selling this June 17th $15 put back. Let's take a look at what the price of that is right now. So if I come over here and I take a look at June 17th, $17, $15 put, the $15 put is currently, I paid 55 cents. And if you subtract out the money I paid in my premium, I paid only 20 cents for it. It's now going for about $1.20. It's $1.16.5 right now. So if I sold this right now, I'd walk away with 5 times return on investment, right? I would have made over a real nice 400% ROI or 500% ROI, something like that, on that 20-cent investment. On the flip side, if you take a look at that $18, I keep going all over the place, the $18 call, I can wait, right? And a lot of people ask me this question. They're like, do I have to really wait till the expiration date, which is next Thursday? No. The answer is no. What are we waiting for? We're waiting for the value of that option worthless. Well, look at the value of the option as of today. If I go ahead and highlight this, the price of this option today is 2.5 cents. For the most part, it's worthless. So I could go ahead and back, not have to wait all the way to next Thursday. I could take care of that obligation right now, buy that back, sell this protective option back, and now I just own a Ford stock, and I've reduced my break-even price. I made a huge paycheck on filling out that protective option. So this is a clear example of what you can do with options, especially when you have an underlying symbol, right? I went long on Ford. I'm long on Ford. I own the Ford stock. But when Ford stock starts to work against you, that perfect opportunity to sell your premium and buy your protection, because selling the premium offsets the cost of the protection, which you'll be able to roll out as soon as the pullback against you is over. And when you roll it out, you're going to make a huge killing on the back end of protection sale. Every time we roll out protection, especially if we offset the cost by selling some premium of the initial purchase, we make a killing. And that's what we did on Ford.
Yeah, and Ford is at that lovely price point that makes options very liquid. A lot of different prices, dates to work with, so not having to worry too much about some of those things that come up when you're looking to implement the option strategies. All right,
People
so
can
Ford,
afford it. People can
totally,
afford it,
totally.
and it's worth something. I like having Ford in my portfolio in the long run anyway.
Yeah, and this actually rolls into our next question very well. And so last week we touched on why people think options are risky. We had a
Yeah.
very young investor ask the question, and his
Manny.
follow-up, to that, I mean, being 10 years old, he's probably working his butt off, cutting lawns. Let's see what else.
Being in 4th grade.
Yeah, lemonade stands, all that. But if
Yeah.
he were to put all that hard work into a pot and he wanted to start trading options, how much do you think he should have to begin implementing some of these strategies that we cover?
Well, now that's a great question. Gosh, Manny, you're way ahead of the game here, dude. I guess they don't have newspaper routes anymore, do they? Maybe
Now,
some, but not like they did when I was a kid. That's how we made money. That and working at the ice cream store. Okay. The scoop is it depends on the type of option trading you're going to do. So, if you do premium selling, like we're talking about, uh, you're going to need, with premium selling, what we like to do is we like to buy some positions, and then when the positions work against us, meaning that the underlying stock is going against us instead for us, we can sell premium and offset any of those losses. And what we wind up doing actually is making even more profit. As we were talking about, depending on the price of the stock itself. So we were looking at Ford. Ford is trading at about $15. It goes as high as $18 right now. It's in a little bit of a move between $15 and $18. That means, you're going to need probably $1,000 or $2,000. So keep working at that. But there's other types of options trading too, right? You can apply options to all sorts of moves in the market. Like there's trend followers who use options, there's swing traders who use options, there's breakout traders who use options. Those are actually three other strategies that I like to do in addition to premium selling, especially the trend following trading, because the trend following trading can easily convert, adjust into a premium selling move, and the premium selling moves can easily adjust into a trend following move if you do it right. And for trend following trading, I mean, gosh, some of these options are just a few, like 30 cents. Remember, Manny, you got to buy them in lots of 100. So if they're 30 cents a share, that means you need about $30 to buy a contract. That might be right in your bailiwick. So, to get into options trading doesn't cost a lot. But one thing I want to point out to you is make sure you manage your risk above and beyond getting excited about the returns. Because if you don't manage the risk, what might happen is you might wipe yourself out very quickly. And that's what a lot of people do. That goes back to your question last week. You're dealing with leverage with options. So even though things are cheap, they can go to zero very quickly. So make sure you manage your risk. And that's the whole trick to everything, right? As long as you're managing your risk, you can have as much fun and take in as much reward as you want. But just make sure you manage your risk on the front end.
wonderful advice. And thank you for the follow up question, Manny. We do have a live question that I think might be worth running through real quick.
Mhm.
I'm going to pull it up on the screen real quick. What is the trend now for GSK? Can we say it reverted to an uptrend?
All right. So GSK, this is GlaxoSmithKline. As you can see here, I have connected the dots from my previous reversals. And so I've got myself a little ruler. And so I'm going to shrink this a little bit so we can see it a little better. And I'll go ahead and extend so we can see that ruler on the side of where price actually is. So this is very much the S&P 500. So if I label these, which I'll do right now, if GlaxoSmithKline had only gone, say, for instance, to this first lavender line, we would have considered that kind of a weak move in the downtrend. A weak, that's not how you spell weak downtrend move, right? If it would have gone into that little sweet spot, that purple zone, we would have said, okay, that's a great, strong downtrend move. And then we would say, if it overshot that, we would call that, again, that's kind of a weak ass, and I don't know if I can say that. Oh, YouTube, I can say that. A weak downtrend move. But look at what it's done. Just like the S&P 500, it's gone into this zone above 100%. So we're not even considering at this point that this move is part of the existing downtrend that has been occurring, right? What we're seeing now is that this move is now in what we would consider a weak uptrend move. So I'm going to change over to a red marker here. Weak uptrend move. And if it keeps going higher and gets above this $47.22, it moves into what we call the strong uptrend move. Now, again, that is an uptrend move, but we need 3 moves. We need 2 tests of support, 2 tests of resistance. That's done in 3 moves to actually call ourselves a mature tradable trend. So this first move, be very careful about jumping in. The first move, we often call it the first cycle, the first move of range expansion and the first move of range contraction, the pullback, is always the most fragile move. And so a lot of traders wait until the trend actually gets established before trading it as a trend follower. You definitely can't do swing trading on a brand new trend like this. So be very careful jumping in on GSK right now until it materializes. This is where I would be saying this is kind of, your premium selling place, because you're uncertain about what is happening next. So we want to jump in with some premium selling type trades, whether you go long or short, and make them nimble. So whenever you set up that protective option, make it more conservative than you usually would. And otherwise, be ready to jump out of either the stock or the back month option at a moment's notice should the trend materialize in one direction or another. Right now, we're kind of in that baby limbo state, right? We don't know what's going to happen next. But this one move, and I think that's what you're asking about, this one move has entered into the territory of being a weak uptrend versus all those downtrend type moves. So we are into the uptrend territory for this one move. And if it goes above 47.22, we're definitely in the territory for calling that a strong uptrend move. But until it matures into a channel, so that means we'd have one range contraction and another range expansion. So we get our 2 tests and our 2 tests of resistance. We want to be careful about trying to trade this in the long term. By the way, we'll know when we've reached a top when we down here get a confirmation that a top has been found. And it doesn't look like that confirmation is coming anytime soon. That confirmation down there is still pointing up, let alone reversing and coming down and giving us a confirmation that a new top has been found. So this first move could be significant, whereas the first move on the S&P that just happened was kind of weak ass. This one is looking like it's going to be perhaps a strong one. We'll see what happens in the next couple of days.
Awesome. Thank you for that question, Timothy. Moving right along, I have a question before we go into our next symbol, and that is, AJ, have you ever flown on Spirit Airlines?
Yeah. We have a beach home down in Myrtle Beach, South Carolina. And so one of the quickest ways for us to get down there is to jump on Spirit and sit like this and not even be allowed to take your purse without paying an extra 20 for your backpack, and sit like this. But it's only a 45-minute ride, so we do it.
Yeah, and I've had similar experiences. It is considered the discount retail or the discount airline of the industry. But they are in the news this week because there are a couple bids out for it,
Yeah.
specifically JetBlue, which is one of the symbols that I know we've talked about before. We've gone over the airlines a lot. Your strategies do well with the airline stocks. And so this week's question is from Sam in Laguna Beach, wanting to know, what's the next play here?
Laguna Beach, California. What a beautiful place. Okay, so check this out. Frontier was the one who's been courting Spirit for like months now. And that kind of makes sense, doesn't it? Because Frontier is also a discount flyer, and Frontier's mostly in the West and Spirit's mostly in the East, and that would make a lot of sense. But yeah, it was just announced that JetBlue, who's known as kind of being the more premium of discount flyers. JetBlue exists, and they have the TVs on the back of every thing, every seat, and they've got snacks and drinks and all that good stuff. So it kind of doesn't actually jive in my mind about why JetBlue would want to go after Spirit, but they are. And like we said in the top of the show, they looking to spend $3 billion plus on Spirit. And so let's emphasize something about the premium selling strategy. The premium selling strategy makes the most money when the underlying symbol goes sideways. If it trends, that's fine. You're going to make money on the back end from the trend trade, as well as make some premium trades. What the premium selling strategy doesn't work well with is breakouts. All of a sudden a pop in price up or down. That doesn't work well for our premium selling. It'll get you out of the position quickly, either at a max profit or at a min profit or max reward type setup. And so that's why we look for boring stocks. We look for stocks that don't have the limelight on them, because we can more easily predict that they're going to stay moving sideways, because they don't have these outside influences, right? The minute that a symbol is in the news, the minute it appears on Mad Money or even appears on our show for that matter, when we talk about it at the top of the hour, it is no longer going to be influenced by just the regular full-time investors, traders, the folks that kind of bring the experience to their purchases and keep things stable. You're now going to get average Joe who's watching, Mad Money on a weeknight while he's making dinner for his 3 kids and his wife, get excited and throw money at it, and then get unexcited and take his money out, and it's going to create a whole bunch of volatility, which can lead to some interesting breakouts. And so we like the airlines overall because the airlines tend to be boring stocks, right? But right now with JetBlue, so if you look at the chart of JetBlue, yeah, JetBlue is forming a bottom here at like $12, and this would be usually a perfect opportunity for us to get into a trade and then think about selling premium against it. I'm fearful, though, because now that JetBlue has the spotlight on them for getting in the news, doing this probably overpriced purchase of Spirit or offering this much, I kind of worry as to whether all of a sudden a news headline will cause JetBlue to break out up or down. I think it was Sam. I think, Sam, it would be better to look at JetBlue, at least until it's no longer in the spotlight, with some breakout trading strategies rather than trying to trade this selling premium. It's just one of those type of stocks right now that now is not being influenced by just those professional investors out there. It's being influenced by people who are following the headlines, and that becomes very unpredictable.
Yeah, I suppose best case scenario could be they purchase Spirit and improve the quality of Spirit experiences.
Good luck, dude. Spirit is one of the only other airline that I've been on that's been kind of even more budget than Spirit was Ryanair in Europe, and I actually think that Ryanair was thinking about somehow creating planes where it's standing room only. I mean, it is, but you can get from one place in Europe to the other for like $20. So I guess you get what you pay for.
Yeah, and that's like 200 miles, right? We're over here flying 2,000 miles across the country.
Yeah, it's true. Yeah.
All right, moving on. We've got one more audience member question related to social media. Social media has been in the news a lot, and Terry from Colorado Springs is interested in seeing what your thoughts are on Snapchat. I'm assuming you're not a big Snapchatter, AJ.
It's funny. I don't do the Snapchatting with other people, but I like their augmented reality filters. So I'll play with like those augmented reality filters, like on a Saturday morning when I'm in bed with the kid and the wife, and we'll like just have like a blast putting these augmented, especially on the cat and on the baby. You put the filters and like the baby has a beard and stuff like that. That's fun, but no, I don't do the original thing with Snap, which is like I think you send a message and it disappears as soon as they see it. I don't do that, but I, I've been looking at the chart, and I've been also, and I think Terry is actually in our program because we were talking about Snap last night and decided that we would keep Snap and talk about it more in depth at the program level. In our program, just for you guys to know, we actually every Thursday take the symbol and by consensus, the best of the best symbol, and we create a whole trading plan around it so that we can trade it the upcoming week. And so all of us are like agreed upon, these are the options we're going to do. And we create a plan. So if that's interesting to you, you should totally check out our program. And I think Terry is in our program because Snap is one of our symbols. Yeah. So I've been looking at this at depth, and it seems quite boring, which is right my alley for selling premium on. And it seems like we've got clear levels of support and resistance. So supports, I've been talking about it throughout this whole show about 2 tests of support and 2 tests of resistance. And it looks like we've established support at about $30, resistance at about $40. And it looks like Snap is going to be a sideways channeler. And so, again, we've got the tides of the broad market being in limbo. So I want to keep it nimble. But I could see, like right now, with my 3 and 5 day EMA crossing, and I can use other indicators as well. But with my 3 and 5 day EMA crossing, I got a signal to go ahead and short this stock, or if I don't want to short the stock, I could buy some substitute put options. I would go deep in the money and farther out in time, like a January 2023 leap. And I could buy those put options and allow those to appreciate. And then probably around this $30 mark where we tested it before, when this thing decides to perhaps test it a third time, I'd be ready to buy some protective call options, probably up here at the $40 mark, and sell some premium probably down here at the $27 mark to offset that purchase. And just like we did on Ford, I would take advantage of the underlying symbol going against my initial covering trade. And that would create premium, right? That would create a reward. Every time the symbol goes against me, I make a premium. And every time the symbol goes in my direction, I get appreciation on my initial covering purchase. So I make money in both ways, whether it's on the back end or if it's every month. And so that's how I would do this. And I actually like Snap a lot. And I think Snap, out of all the social medias companies, is the one that's not in the limelight anymore. And I think that, it's in, at least for the last couple of months, in this phase. But I'm going to say it a third time. Let's do the trade, but let's be conservative, especially on those moves against us. Let's make sure we protect ourselves with those protective options. Let's not put too much risk in there by using like a 25. Let's use like a 27.5 or a 28 strike price and keep those trade zones tight, at least until we establish where the broad market's going.
Yeah, and from touching on our discussion earlier on the advertising, platform, Snapchat actually they have a really good advertising platform that's comparable to Facebook's on a tech stack level, but the users are not there, right? It's more of like the teen audience.
Yeah.
But I agree with you that augmented reality technology is phenomenal, right? Like there's definitely something there for the years to come. And it's fun to play with.
Yeah, it is fun to play with.
we've got one more question that came in with 3 symbols. So I'm going to give you the opportunity to pick one of them that you want to go over here. So let's go ahead and throw it up onto the screen. But we've got M, which I think might be Macys, maybe, ARMK or GES. Which one do you think you'd want to go into?
So Macys looks like I wouldn't want to use my premium selling on Macys, and the only reason why I say that is because Macys doesn't clearly oscillate between a support and resistance line. In other words, it would be difficult to time our entries buying and selling premium. So in fact, it looks like it's kind of in some sort of consolidation move. So maybe we think about Macys and look at what sort of events might cause Macys to spike and think about breakout Macys. So I'm not interested in Macys. I think we featured Guess Jeans, that's GES, in the past. And Guess popped out of our sideways channel only to pop right back in. So there must have been some sort of transient shock to do that. Talk about Guess. Guess historically has been one of those symbols that we've been able to premium on pretty reliably. What I'd suggest about Guess is since we popped out, we kind of took ourselves out of calibration for a hot minute. Let's let Guess mature a little bit. Let's let Guess start forming into the pattern that it was before popping out, where there was clear levels of support and resistance, clear reversals. Let's give it about a month to get back into the groove of trading, and maybe we'll reevaluate its levels. Before we were watching it between about 2120 and 2450. That might change, but let's let it establish its tops and bottoms. So I'm not going to touch ARMK because just time on our show. But as far as Guess and Macys, I'd be looking for potentially a breakout play. And Guess, I'm just going to let this mature before I start selling premium again. Both of those look like they're way worth to keep on our watch list.
Yes. And we appreciate the live questions. Keep them coming. If you do want some more in-depth analysis, that's what the workshop's for. That's what the premium group is for. Jump in there and people will answer questions all day. And so I'm going to go ahead and drop the link in the chat one more time. If anybody new to the show, to the channel, hit the subscribe, hit the follow button, show some love. AJ, this has been our 25th episode.
I can't believe it. That's awesome. It's awesome.
And I'd love to see, and I don't know if there's a way to track, but all the positions we've talked about and you know where they've gone over that time. But I think that's, you know, for another time. We're just here to educate. We're not running portfolios.
Yeah.
All right. So with that being said, appreciate everybody's time once again. If you have questions, leave them in the chat, hit the DMs. We'll get back to you as soon as we can. Otherwise, hope everybody has a good weekend. AJ, anything big planned?
No, I think we're just hanging out with friends this weekend.
I will be hitting up a pool today because there's a heat wave. It'll be topping 95 today. I might as well take advantage of it. It's Friday. And then, you know, I guess I'll catch you next week.
Catch you next week, Sip. Goodbye, everybody.